Frank, thanks for coming to Forbes. Happy to have you here today.
Steve, always great to be back with you.
We're doing this video on the day the Fed meets to discuss possibly tapering quantitative easing, but let's take a longer term look. Obviously, the Fed is stepping back from what has been an extraordinary effort to stimulate the U.S. economy and to get people involved in the market. From a banking standpoint, from your business, from the housing market, what is the impact going to be from a Fed that is perhaps slowly but certainly backing away?
So I think there's two issues here. One is that the speed at which they back up, I think, is going to be very slow and will be consistent. And so there'll be no shocks to the marketplace. I think also we have to look at where we're starting from, right? So when we look at housing and we look at even the banking industry, our own industry, interest rates are so low and they are such historic lows that a little bit of an increase in interest rates is not going to derail the economy. And so it actually may stimulate people to sort of jump off the fence and go do something. I think we're seeing some evidence of that in the financial markets today. I think we're also seeing some of that in the purchase money market and mortgages, where people are saying, hey, now's the time, let me lock in rates going forward. So I do actually believe that it's a good thing. I also like to tell people, hey, listen, I'd much rather pay a little bit more interest on my house mortgage today, knowing that the value of my home is going up because the economy is stronger, than getting a super low rate at a time when the value of my home is going down because the market is not well.
Right. And I think the real worry people have is that the rates going up will cause an event in the housing market, some type of real problem that all of a sudden the house's values start going down again. Obviously, that's not something you see because we're still at that absolute low level of rates.
Yeah, I don't think we're anywhere near that yet. When I got married in 1984, mortgages were 13.75%, and I still went out and bought my home.
Still bought houses.
So, and that wasn't the high. So I think starting at this incredible low that we were at maybe a year or so ago in interest rates, and moving to a place of even still incredible lows, but not as low, I don't think derails the housing market. I think the housing market is just getting off its feet. I think it's great. I think there's lots of compelling reasons why people should invest in a home today, or why investment dollars would go in the housing market. I don't think those things change for the foreseeable future, no matter what the Fed does here. Rates would have to go a very long way before we see evidence of the housing market taking a hit, in my opinion.
All right, let's talk about the banking business now. It's not just housing. There's a lot going on, a lot you guys are involved in. But how is it to be a bank right now? All we keep hearing about is more regulation, tougher standards, a lot of requirements being put on banks. Some say not enough, some say too much. But what's it like running a bank today and running it sort of in the shadow of Wall Street as you are in New Jersey?
Sure. So, I think as we look at the environment today for banks, and specifically smaller banks, I think they're shouldering a larger percentage of the regulatory burden relative to their size than maybe the largest institutions are. And so I think they're at somewhat of a competitive disadvantage. I think we're seeing that in some of the M&A activity that's starting to spring up. People are just saying, hey, it's time to give up. It's too much. I can't spread my costs over a big enough base. So in some cases, very difficult to run a small institution with this incredible regulatory burden. A lot of the regulation that's coming down from Washington today is really sort of trying to close the barn door after the horses left, or trying to solve for a problem that actually didn't exist but we think may exist at some point. So I do think it gets harder and harder for banks, smaller banks, to survive. That being said, I think this is a terrific place to be. The New York metro area for us is fantastic. We do, as we said, we think with an accommodative interest rate environment, with a positive growth trend in GDP, with where we think unemployment's going, with all the dynamics that are going on, we think right now is a good place for us to be positioned, for ConnectOne to be positioned in this market.
And interest rates rising in a reasonable fashion because of good things, because the Fed is pulling back from extraordinary stimulus, because they think the economy is getting into better shape. All good things for a bank.
So, I like to tell people all the time that I find it interesting, let's not just focus on what the interest rate is, let's talk about why it is. Mm-hmm. And so if the economy is recovering and unemployment's going down and the value of assets are going up and inflation is tame and we have an accommodative regulatory structure, and that in turn, raises interest rates, I'm all for it. right? Because we want a stronger environment, a stronger economy. We want to be in a better place. But there's like everything else in life, there's a cost, and the cost there is in interest rates. So yes, I agree.
And now, one of the ways you guys have expanded, obviously you've done well, and it's a fast-growing bank, and you've taken a lot of market share, but you're not doing that in a physical sense. You haven't expanded your footprint drastically. Any acquisitions you've done haven't been just to add to your branch base or put more people in the company. You've been very measured in how you expand. Can you talk a little bit about that and why you're not worried about having the most branches in New Jersey, for instance?
Well, Steve, for the first time in the history of this country, the number of branches, not banks, but branches, has actually gone into decline. And so the number of banks over the last 20 years has declined by almost 50%. But even during that descent of 6% a year for the last 20 years, we've actually seen the number of bank branches actually increase. That's going in the other direction today. Why? Technology, right? So, and ConnectOne Bank has always been, a bank that really prided itself on its usage of technology, whether it's mobile deposit capture, mobile banking, all different types of payment services, all the things that you would want as a small business owner to use in your business, and you no longer need to go into the bank. If my kids didn't have to come and say hello to dad at the bank, they would never step foot in a bank branch ever. And that's the direction that the economy is moving, that the banking industry is moving, and so the use of a branch and the value of having the best real estate on the best corner in the best towns is really not the way you're going to grow your bank today.
Talking about your resources and what you guys have available to you, obviously you did an IPO earlier this year. I think Twitter followed your lead because they filed confidentially just like you did. But
I like that thought.
Talk a little bit, if you could, about what it's been like this first year as a public company. You were a closely held firm prior. You were only founded in 2005, I want to say,
Correct.
if that's accurate. What's it like now being in the public eye, dealing with public shareholders? What's the reception been? What was the process like? Share a little bit of that.
So based on our share price, the reception's been good, right? So the stock is up some 20% since our IPO. Our institutional shareholders are very happy, with where they are in the world. It is a different shareholder mix, yes. We started the bank where our shareholders were our customers, and it was a very close-knit community. It's a little bit different today, but I tell you that I enjoy my day. It's interesting to have another perspective, to hear what institutional investors are thinking about, not just our bank, but thinking about the space. And I think it's a great partnership that we've formed together. I think we've done a lot to bring the company to a place where I think we can move and lever the company to go forward. I think it's been all good. It's everything that we've expected through this process. Brought us enough capital now to be able to grow and continue to lever our balance sheet over the foreseeable future. And I think it's just been a terrific experience.